So we got 3 clues on crude today. And again, these 3 clues, we went over these in real time this morning with you guys in our live trade room as a member or a guest at 7:30 a.m. this morning. And those 3 clues we saw, the first one was the inside day, right? We actually called it a transition, which meant it first came down and then came back up. A transitional inside day. That means when we broke back above the previous low of day, above 92s, who was in charge? The buyers were in charge. But then our second clue said, be careful because we have a bear channel right here. And this bear channel says, don't even think about buying into the highs of that bear channel. I'm going to sell the highs of that bear channel if we can get up that high. So my second clue said, even though we're going to be above the previous low of day, buyers are in charge. If I get up to that high of that bear channel, I want to be selling here at resistance, above the bear channel, and those bear channel highs. And then at 10 o'clock this morning, that was our third clue. We got some bearish news. Okay, here in the U.S., factory orders were lower than expected. Not going to be a big clue, but that gave us a little bit more comfort now going short at the resistance levels overhead. So the 3 clues we got this morning were pretty simple. How do we use these clues? Well, here's what happened. We began our day by breaking down below the previous low of day. We knew we had to be careful trading at the lows of that bear channel, right? Well, it didn't last very long. Price came right back up pretty quickly. And when it came back up, it began to wedge around the previous low of day. We initially wanted to buy above the previous low of day, and I believe we did a couple times this morning, but it was pretty sloppy. What ended up happening was we found a price wedge. And so we defined this price wedge around the previous low of day. Well, how do we trade a price wedge? A price wedge, fake out breakouts. And it actually worked out perfectly this morning because what happened was I initially tried to trade the fake out breakout when it broke out. Buyers were too strong and the buyers kept going. So we kept buying pullbacks all the way up. And this was where I wanted to illustrate this for you guys today because as we kept rising, again, I was breaking out of a wedge. I sold at the highs and then bought for a wave pattern long. So we literally, when price rose up out of the wedge, I sold it on down. The buyers were strong enough to give me a wave pattern long, and I took it right back up. So we go 30 ticks down for profit, 30 ticks back up for profit. 30 ticks back down, 30 ticks back up. So we kept using that wave pattern with a 2-step short on a faster time frame. Now, we make new higher highs. New higher highs, again, we're concerned this wedge is going to suck that price right back down. We still weren't totally convinced yet. Now we're going to be convinced. At 10:45, I take my short, 33 ticks off the highs into another 13 range wave long, and we make 30 more ticks. So 33 ticks at 10:45, sell them with a 2-step short. Into a wave pattern long at 10:47, another 30 ticks. It was almost too easy. And let me show you guys how this pattern played out. We showed you guys this live in real time, so everyone was able to trade right along with me. I'm going to teach you all this stuff as a member. We're going to go up. There's my 2-step pattern short. Look out below. There's 33 ticks. Then watch what happens. I go up, make a swing high above the 79. 80 was my entry. And of course, off to the races for a wave pattern long. So again, you can see how the 4 range chart, this is my 4 range, it could also be an 8 range or a minute chart, something much faster, will give me the entry short to then get into that wave pattern long. An excellent example there, guys, of how we use multiple time frames to maximize our profit, being able to, as price rises, we know it's going to come back down to that wave pattern, right? I know that when price rises up, I know it's coming back down, so I might as well get in a position to get short and profit from it